All right, so you're ready for a deep dive into some really fascinating stuff going on in crypto right now.
Right.
Talking over-the-counter trading, OTC.
Yeah.
It's surging, and there's some really interesting data to unpack here. It's not just about what's happening, but about why it's happening,
Yeah.
what it means for the future of cryptocurrency.
Right, and we're seeing volumes on these OTC desks that are taking us right back to that crypto craze of 2021.
Oh, yeah.
Especially, since the U.S. elections, it seems like.
Yeah.
Things have really shifted.
Definitely, yeah. There's been a shakeup for sure. But before we go any further, can you just remind me, what exactly is OTC trading and how is it different from the regular exchanges?
Okay, so think of it this way. Imagine you're buying a really rare and valuable piece of art.
Okay.
You're not just going to walk into any old shop, right? You'd go to a specialized dealer, someone who knows. The market, OTC trading, is kind of like that. It happens directly between two parties away from the public, exchanges. This gives you privacy, personalized deals. It's perfect for those big institutional investors moving serious money.
So it's like a high-stakes art gallery, but for crypto.
Gotcha. And you're saying these institutions are really fueling this surge?
Exactly. They're mainly focused on the highly liquid assets, Bitcoin, Ethereum, that kind of thing.
Playing it safe, huh? Sticking with the blue chips. But it seems like individual investors are taking a different approach based on the analysis you sent over.
Yeah, there's a really interesting divergence happening there. Well, the institutions are playing it safe. Individual investors are getting into altcoins. Solana in particular is getting a lot of attention.
Interesting. Why Solana specifically? What makes it stand out from all the other altcoins out there?
Well, Solana is known for its speed and its scalability, which makes it really well suited for certain applications, especially in the decentralized finance space, DeFi. Plus, they have its unique proof of history consensus mechanism, which is very efficient. Of course, it's still relatively new compared to the giants like Bitcoin and Ethereum.
So there's more risk involved. But that also means there's potential for higher returns, which is likely why it's attracting those investors who have a bigger appetite for risk.
So it's the Wild West of crypto? Higher risk, higher reward, I get it.
Yeah.
But what about those institutional investors? Are they just sitting back and watching as everyone else takes on the risk?
Not exactly. They're managing their risk in other ways. And we're seeing this reflected in the derivatives market. There's been a big increase in the use of options specifically for hedging those crypto investments.
Okay, so break this down for me. Pretend I'm new to this. What are they doing with these options?
All right, so imagine an institution, they're holding a sizable chunk of Bitcoin. They could use a strategy, like a covered call. This means they sell call options on their Bitcoin. It generates income for them, and as long as the Bitcoin price stays below a certain point, the strike price, they keep that premium, so it's a way to profit even if the market isn't shooting up, and it cushions the blow if the price drops.
So it's all about mitigating risk while holding those big name assets. It seems like they're really in it for the long haul. Do you think this has anything to do with the whole Bitcoin ETF situation?
Absolutely. The introduction of Bitcoin ETFs has given crypto a lot more legitimacy in the eyes of traditional investors. An ETF, an exchange-traded fund, is like a basket of assets you can buy or sell on a stock exchange. So a Bitcoin ETF is a basket of Bitcoin. It makes it easier and more familiar for traditional investors to get involved, and that influx of mainstream money boosts confidence across the entire market, including over-the-counter trading.
So like crypto is finally getting that stamp of approval from Wall Street.
Exactly. And all signs point to continued growth in OTC trading. The demand for cryptocurrencies is there. The derivatives market is becoming more sophisticated, offering more tools for all types of investors. This all means that crypto is becoming more and more intertwined with mainstream finance.
It really is fascinating to see this interplay. You have these institutional investors driving the OTC boom. They want stability. They're sticking with the established assets and using these really complex strategies to manage risk. Then, on the other hand, you've got these individual investors who are drawn to the potential for high rewards with altcoins like Solana. And all of this is happening as ETFs and other developments are bringing crypto closer and closer to mainstream finance. It really makes you think, though. What happens when traditional finance fully embraces crypto? What are the opportunities and what are the risks? It's definitely something to keep an eye on.
For sure. Host speaker.